Chris Clark, kind of a dope name, deposited $25,000 in a bank account in the name of NetSolutions in exchange for common stock. So for my brain, so here's all their steps, right? Step one, put the date. Step two, the account to be debited. But you're like, to me, I've got to be like between the date and step two, I've got to actually think about what's debited and what's credited. So my process, all right, I have cash. He's putting money in the bank account of the business. So the cash will be going up and the common stock account will be going up. Cash is an asset account. Assets increase with a debit. Common stock is a stockholder's equity account. They increase with a credit. Now I know my entry, okay? So I'm gonna debit cash. And so the debit is always listed first. And then you'll see over here on the debit credit side, debit's on the left, credit's always on the right. Again, remember the terms debit and credit don't mean anything other than left or right. They don't mean anything else. We get this banking idea with debit cards and credits, but you know, so it's the same as like port and starboard, right? You know, on a boat, right? Like that's all it means. Actually, port and starboard are slightly different than left or right because port means left in relation to the front of the boat, right? Not just left anywhere on the boat, but maybe you didn't want to know that. All right, fore and aft. Okay, that's it. Then there's the mizzen part. Okay. So we're going to debit cash, $25,000, and then we're going to credit common stock, $25,000. And then after we do a journal entry, what we do is we record it in what's called a ledger. This ledger is set up as what's called a T account because this thing looks like a T. And we use that so that over time, we can see what the balance in any account is. Again, most of this is done by computers. Recognize that if some of you decide, oh, I'm gonna go on and be an accountant someday, that this isn't like, you don't do all this by hand. You put your transactions in a computer, it does all this work for you. But the reason you have to learn it when you're starting out is you have to understand the whole process. At the college, we have a bunch of people with the term accountant. Most of them are just data entry people. They're doing a lot of computer work, but our controller, who's our senior accountant, he has to understand how all the processes come together, because when we get audited, guess who the auditors say, show me this transaction and where it came from, right? And so, and the difference in salary between the level one accountants is they make 35 grand a year and the controller makes 130 grand a year, right? So this is why you have to learn all the little stuff underneath. Anybody have parents that are CPAs? Because every semester I get one or two CPA parents and they'll be like, why are you learning this? Computers do all this crap. You don't have to know this stuff. Well, they forget that they had to learn their times tables before they could do advanced math, and they had to learn to ride a bike with training wheels before they could ride it with none, right? So on November 5th, they pay $20,000 for the purchase of land as a future building site. So again, I'm going to say, okay, what do I have going on here? I have land going up. I have cash going down. Land is an asset, so it's going to increase with a debit. Cash is an asset, so it's going to decrease with a credit. So now I can make my entry. I debit land, $20,000, and I credit cash, $20,000. That's what the journal entry will look like. We purchase supplies on account for $1,350. So supplies is an asset. It will increase with the debit. And then accounts payable. What type of account is accounts payable? It's a liability account, and it's increasing. And so it will increase with a credit because that's the rules, right? Again, don't be afraid to use this reference sheet until you get more comfortable. This is new stuff to you, so it's going to be a little hard at first. I don't know where this idea comes from that I'm going to jump into something brand new and it's not going to be hard at first, right? Like anything you've ever done that had any value was difficult in the beginning. And if any of you play a musical instrument, you remember the hours of your mom making you do piano or violin or whatever it was that you were doing. And you're like, I hate you for this, mother. And now that you can play, you're like, okay, I get it. Still hate you though. I mean, but those are other issues. Okay. Maybe, I hope you guys don't hate your mom. Even if your mom's annoying, remember she loves you, and she's usually being annoying because she's worried about you, not because she, I mean, don't get me wrong, there are some like really abusive or hardcore like moms out there, but most of our moms are just annoying. My mom, never annoying, always perfect. All right. let's see. So we received cash of $7,500 from customers for services provided. So cash is going up. Cash is an asset, so that's going to go up with a debit. And then fees earned was the term they're using here, is a revenue, and revenues increase with a credit. So my journal entry will be debit cash, credit fees earned. Just so you know, I mean, I see you taking pictures, and that's okay. But also, if you want a video of this lecture that I'm recording right now, so I'm wearing this earpiece, will be up on Canvas in the next couple days. In fact, what I've been doing is breaking them into like chunks for each section and then having the whole video uncut. So all of that's available. Also, the full PowerPoint deck that the publisher puts out is available in their additional materials in there. I forget what I call it on there, but it's like textbook additional stuff or whatever. So that's there if you want it. So there's a lot of resources there. But remember, I've trimmed this down to 35 slides from there, like 90. Okay, on October 30th, they incur the following expenses: wages of $21.25, rent $800, utilities of $450, miscellaneous of $275. So all expenses are always increased with a debit. So I'm going to list all my expenses. So here you can see we have a bunch of entries: wage expense, rent expense, utility expense, miscellaneous expense, and then since we're paying it in cash, and cash is an asset, it'll be going down, we'll credit cash. And again, so even though there's more than one entry, this is still dual entry in the sense that our debits and our credits will equal each other. There's always an equal amount of debits and credits in any given transaction, every time. If they don't balance, then you got a problem, and it's something you can solve at that level, the lowest level, instead of way later when you're trying to make your balance sheet and it doesn't balance, right? So I try to check each one. Most computerized systems, if you're not in balance, when you go to hit enter, it's like, whoa, wait a minute, something's not right here, right? All right, they paid creditors on account $950. So I'm going to have my liability, accounts payable, will be going down. Liabilities decrease with a debit. And my cash, which is an asset, going down, and assets decrease with a credit. So that'll be my journal entry. And I'm kind of just going through it a little faster now because I feel like you guys are starting to get the concept. And probably what you need next is practice at it more than more talking about it, right? NetSolutions purchases $1,350 they purchased $1,350 in supplies on November 10th. Chris Clark determined that the cost of supplies on hand at November 30th was $550. Thus, $800 of the supplies must have been used during November. Are these transactions sounding familiar? Right, they're the same ones we did when we were just showing how they affected the accounting equation in the last chapter. So they figured out how many supplies they used. They debit supplies expense, credit supplies, because supplies expense is an expense and it increases with a debit. Supplies is an asset and it's going down. So that's a credit. There we go. There's ours. And then H, we paid dividends of $2,000. Dividends increase with a debit. Cash decreases with a credit.